Good morning and welcome to the Brazilian American Chamber of Commerce's third installment in the webinar series, COVID-19, What Lies Ahead? Number 3, Business and Legal Strategies to Navigate the Crisis, in conjunction with our members and partners, Mattos, Filho, and Proskauer. First and foremost, we wish you and your families health and safety in this difficult time. Thank you all for joining us, and thank you to Mattos, Filho, and Proskauer for sponsoring the event. Our moderator today is Amadeu Ribeiro, partner at Mattos Filho and board member of the Chamber. Amadeu advises clients on complex antitrust matters, including merger review cases, cartel and dominance investigations, and compliance counseling. He has represented clients from various industries, including aviation, automation, beverage, natural resources, and pharmaceuticals. He's a member of the firm's technology, innovation, and digital business practice, advising tech clients on antitrust and other regulatory aspects of their business in Brazil. He's a member of the Legal Programs and Events Committee, the Board of Directors, and the Executive Committee of the Brazilian American Chamber in New York, a member of the International Task Force of the American Bar Association Antitrust Law Section, and an adjunct professor of antitrust law at Fordham University of Law. Mr. Ribeiro has received various recognitions, including Chambers of Latin America, Who's Who Legal in Brazil, Global Competition Review, the Legal 500, LACCA, etc. He holds a bachelor's in law and doctorate of laws from the University of São Paulo, and an LLM cum laude from Fordham University Law School. Before turning the screen over to Amadeu, I would ask the attendees to please use the Q&A tab for questions. You can make them at any time, and we will look to answer them interactively during the discussion. Thank you very much. Amadeu?
Thank you, John, and good morning, everyone. This will be a discussion on the impact of COVID-19 on business activity in Brazil. And we will start today with Reinaldo Fiorini, who is the Brazil managing partner for McKinsey. And we have a presentation that where he will be covering his views on the impact of COVID-19 on Brazil and give us his perspective. Following from that brief presentation, we're going to move on to address two topics that are currently very hot topics, namely labor and employment and tax considerations. And for that, we will have two partners from Mattos Filho covering labor and employment, my partner Cleber, Venditti. Tax will be covered by Luiz, Felipe, Ferraz. And then we have the pleasure of having two partners from Proskauer. Brenner will be covering labor and employment considerations, and Marty Hamilton will cover tax. And with that, let's proceed. So, Reinaldo, the floor is yours.
Thank you, Amadeu. And thank you to the Brazilian American Chamber of Commerce. Thank you to Mattos Filho and to Proskauer. Pleasure for me to be with you today. So before we go into the legal matters, we thought that would be useful to give an overall broader context on where the Brazilian businesses are now. What's the current context, the background. So before anything, this is a major humanitarian crisis, a crisis that is affecting the lives of millions and millions of people. But in addition to affecting the lives, it's also affecting the livelihoods. If you think about it, by different metrics, this will be the biggest economic crisis since World War II. So huge impact across sectors, across the economy. So just a couple of different markers, right? Different metrics for you to get a sense. Last month, the sales of cars in Brazil decreased 70% compared to same month last year. Sales of clothes, 80% less than previously. For those who know well the Congonhas Airport in São Paulo, on a normal day, it has about 600 departures and landings, 600. We had a couple of weeks back, a Sunday with 0, no departures, no landing. Couple of weeks back, we had a weekday with only 2 flights, right? So major impact across the economy. So the way that, you know, the majority of the CEOs, the business leaders of the main corporations in Brazil are thinking about on this crisis is along 3 different horizons. First, a horizon of response, the immediate answer to the crisis, right? In that phase, that was probably, you know, over the last weeks, the imperative there was to first keep people safe. And this was about your employees, but also about your customers or your partners in the supply chain. So the first imperative there in the response was keep people safe. The second was operational continuity. So how do you make sure that you continue operating? How can you make sure that your factory, for example, you change the parameters, the standard operating procedures there to make sure that you continue producing food, right? Or to, you know, how do you shape your services so that you can continue providing them to your clients? How do you keep the maintenance of your installed base working? And the third part in this initial response phase was securing your cash flow, right? So that was the initial phase, responding to the crisis. Now we are starting to get into planning for the recovery phase, planning for what lies ahead. Now, when we think about planning what lies ahead, it's important to first understand the departure point, right? Where your company is now. And we did some analysis trying to, looking at all the listed companies in Brazil, in Bovespa. So analyzing the Bovespa, we found out that one third of the companies in Bovespa, as we can see in the next slide, 1/3 of the companies have debt that they are quite leveraged. They had a debt to EBITDA of more than 3 times, right? So tricky for 1/3 of the companies with such debt level, right? Another perspective that we looked at is how the companies think about their cash flow. So again, in the next slide, we looked at the cash flow position of different companies across different sectors, right? Now, in the next slide, you can see that for the 1 in every 8 companies of Bovespa only has cash coverage for less than 3 months. Okay, so that's a challenge that you're going to see your clients, the big companies in Brazil, that some of them have a very high debt ratio, and they don't have so much of a coverage in cash flow, right? Then the second point when the companies are now starting to plan on the recovery is to build scenarios. So they first understood their departure point, and this can be, as I mentioned, right, the debt ratio or the cash flow, the cash coverage, but it can also be about the market position, how their channels are doing. The second is to build scenarios. So you are all reading about the different scenarios of the economic recovery. Is it going to be V-shaped? Is it going to be a W? Is it going to be an L? So lots of economists are now trying to understand how can this recovery be. Now, the recovery will be different by sector and even by country, right? So it's important that the companies, and this is what the CEOs, the executive teams are now trying to put on paper, what are the different scenarios that can happen, and what would be their actions for these different scenarios, right? Then the third step in the recovery, in planning for the recovery, is to identify what's your strategic posture. We have seen analyzing crises before that if you come in a strong position and you do the appropriate moves, 24 to 36 months after the crisis, you can come up with a 50% bigger growth than your competitors. So the companies now need to decide, based on their initial position, based on the different scenarios that they can face, what's going to be the posture? Are they going to try to grow in certain segments? Are they going to use the current situation to go after talent that maybe before they were not being able to acquire those talents, but now with the market more fragile, they can go there and get this talent, right? So here the third step, it's about understanding the strategic posture, right? And then the fourth step here in planning for the recovery is to really say, okay, what's my journey, right? How am I going to go about this? What am I going to do when, right? And I think that the last step is really making sure that you act when the time comes. So pay attention to these triggers that you define and you act properly, right? So this is, to be frank, where the majority of business leaders are really planning to the recovery phase. Now, when you are doing this planning, it's important for you also to have in the back of your mind and look ahead on the next phase that's going to come after the recovery. That's the reimagining the way that your business works. And of course, right, these phases are not totally distinct. There is some overlap between them. On the reimagine phase is try to understand what were the underlying factors that may have changed in your sector, in your industry, and try to see how those affect you and how can you shape your business, shaping your operating model to those. Let me give some examples. We may see some shifts in consumer habits, right? So people using more digital channels, right? We may see some disruptions in the supply chain. So the way that your suppliers operate, right? So we may see some fundamental change, some fundamental disruptions. Yeah. And it's important already while you are in the recovery, you start to think, what are the fundamental changes? How can I reimagine my operating model, my business model, the way that I reach out to my customers, the way that my end clients behave, to see what do I have to change. So just before going to the legal matters, just wanted to give this perspective of huge humanitarian crisis that's triggering the biggest economic crisis since World War II. First, the business leaders, the companies in Brazil thought about the response, what they do to keep their people safe, how they change their operations to continue operating. Then now they are planning about how to go about the recovery, understand what they can do to come out stronger than their competitors, to be able to drive a 50% higher growth than the competitors in the recovery. And important also to think about the reimagine, given the changes, given the different landscape that we're going to have, how you can change your business. So Amadeu and audience, I hope that this provides you a sense of what business leaders in Brazil are thinking now, how they are planning ahead, so that you can take this into account when you are thinking about the labor or the tax implications for them. Thank you.
Thank you very much, Reinaldo. So we're going to move to the area of labor and employment, and we'll start with a question for Guy. Guy, as we see the impact on labor and employment everywhere, how are businesses dealing with it in the United States, and what are the main issues you're seeing? I think you're on mute, Guy.
Still learning about this new world. Thanks, everybody, and I really appreciate the question and appreciate being part of today's webinar. So my name is Guy Brenner, and I practice employment law in the United States. I'm based in Washington, D.C. And we've been helping employers navigate the complexities of COVID-19 and what it means for their employees in the workforce since this first sort of became an issue on the national radar here in the United States. Sort of became an issue starting around January, and that's what I refer to as phase one, late January, early February, where we started dealing with focus on employees who may have traveled to areas that were viewed as hotspots at the time. I think everything now is considered a hotspot. It's all relative. But back then it was mostly China and the Far East, and how to handle employees who went there and how to try to mitigate the risk. And that involved questions about whether you could quarantine people and keep people at home who returned from either pleasure or work trips abroad. And that was sort of the first phase. And then February into March, we started to deal with more cases in the United States and what could employers do to mitigate the risk while they remained open. And so essentially we were dealing with a lot of questions of, can we take the temperature of employees before they come in, even understanding that you could be asymptomatic and be carrying the virus, but is that something you're allowed to do? And the answer now is yes. I mean, you under the current pandemic guidelines issued by the Equal Employment Opportunity Commission, employers are now given license to check temperatures of employees as they enter the workspace. But there were a bunch of questions as we were trying to deal with how to keep, how to handle when the workplace is open. What are our obligations when we find out that an employee who's been in the workplace has been diagnosed with COVID or has COVID-like symptoms? And these represented a lot of practical, but some legal questions as well. And we were navigating those for a period, basically February into March. And then starting around mid-March in the United States, almost universally, everything began to shut down. And this happened in the United States, not on a federal level, but on a state level, with each state implementing its own requirements and guidelines with regards to shutting down businesses and determining which businesses could stay open and under what conditions. And this patchwork that we have in the United States of laws on a federal and then state and then even local level has really dictated what's happened and what kind of employment issues employers are dealing with. So some employers have remained open because they've been deemed to be essential businesses. And so those employers have had to deal with questions of what do they need to, what can they do in terms of requiring face masks? How do they handle social distancing? What are the requirements under the Occupational Safety and Health Administration guidelines with regards to keeping your employees safe? So there have been a series of issues with regard to making sure that employees have the personal protective equipment they need to ensure that your employers are complying with the requirements of the law for those employers who are still open, and have employees on site because they are in manufacturing of essential goods. And then, there are other practical concerns that come up. In addition, during this phase, a number of laws and executive orders started popping up that added to the regulatory landscape. So most prominently, the federal government passed the Federal First Coronavirus Response Act, or the FFCRA, which provided paid leave requirements on a federal level for the first time in this country's history. And so essentially, under certain conditions, employers were required to provide their employees with paid sick leave or leave for to take care of others or their who have illness or those who have children who were not in school. And again, this reflected the first time in the nation's history that a federal law providing paid leave benefits was authorized and passed. And so employers had to manage those, that new regime, which was, as you might expect, rather rushed in the rollout, and left a lot of questions that had to be focused on. The other element that employers have been dealing with in this time is obviously the economic consequences of the coronavirus pandemic. And many employers have had to lay off workers. So that's involved a lot of special analysis of, we have in the United States laws that are called WARN Acts. They're on the federal level and on the state level, which require certain notice requirements in the event that you have to shut down a certain percentage of your workforce or lay off a certain number of employees. The laws are quite intricate and don't necessarily account for what we're dealing with today, which would be a sudden stoppage of the economy, and whether or not that in any way alleviates the requirement of giving 60 days notice or pay in lieu of that if you're laying off people. And so that was an issue that we were navigating with employers together. Other issues we were navigating were things like reducing pay. So some employers wanted to keep their employees on but reduce their pay. So what are the requirements there? Under state and under state laws and local laws, a lot of times you have to give notice if you're going to reduce people's pay. And in some cases, it implicates our overtime laws. If you don't do it properly, you could potentially take someone who isn't entitled to overtime and suddenly make them entitled to overtime based on the reduction in the pay and how you do it. So in any event, that in summary are the issues that employers have been dealing with in the wake of the pandemic, and I'll turn it back over to you.
Thank you, Guy. And maybe we should hear from Cleber the perspective on the Brazilian law on the very same issue. So Cleber.
Thank you, Amadeu. Thank you, everyone, for attending this event. It's a pleasure to be here and talk about the labor employment repercussions of this outbreak in Brazil. Amadeu, as you know, Brazil has a very complex labor employment regulation, and I think it's fair to say that we are not in the top 10 jurisdictions in terms of flexibility of labor employment regulation. Although it's true that in recent years we implemented very important reforms to change that a little bit. However, now we are facing a situation in which flexibility is required. Otherwise, we may see a material increase in the unemployment rate. So the first issue that the companies had in Brazil was how to deal with the lack of flexibility in our legislation. So in this scenario, we have seen our government acting to try to mitigate as much as possible the impacts of COVID-19 in the employment relationship. So far, the government enacted two important provisional measures to deal with the labor and employment aspects of this pandemic. And the idea behind these two PMs was to sustain the level of employment, again, as much as possible. So first, we had the provisional measure 927, which was enacted at the end of March, aiming at the flexibilization of some labor topics, such as vacation, either individual or collective vacation, telework, anticipation of holidays, and compensatory schedules, in Brazil known as bank of hours. Basically, this first provisional measure reduced bureaucracy to manage the workforce in topics related to vacation and telework. So this was the first issue that the companies faced in the beginning of the crisis here in Brazil. After that, on the first day of April, provisional measure 936 was enacted, which at that time was a measure highly expected by the Brazilian employers. And indeed, this was the most important employment provisional measure introduced since the coronavirus crisis started here in Brazil. Basically, it allowed employers either reducing salaries and working hours, and it could be done for up to 90 days, and suspending the employment contract for up to 2 months without payment of salary. But the employer has to maintain benefits and has to pay a cost allowance, which is equivalent to 30% of the base salary of the employee's base salary. The interesting thing, and I think Luiz Felipe could go deeper on this point, is that this cost allowance will not be subject to taxation or even payment of normal employment rights. So it was a very important measure to try to reduce unemployment here in Brazil. Where salaries and working hours are reduced, or even if the employer decides to suspend the employment contract, the government will pay workers a social benefit, which will be a percentage of the unemployment insurance rate. And such amount varies a lot. Depending on the salary levels, it's possible to suspend the employment agreement or to reduce salaries without having an agreement with the labor union. And this was a very important part of this provisional measure 936. In both situations, reduction of salaries or suspension of the employment, there is a job protection period that must be observed by the employers. This provisional measure that I just referred, the 936, was used on a large scale by the companies. And as we could learn from our clients, many companies have been able to avoid terminating a large number of people, at least so far. So back to your point, Amadeu, considering these two PMs, the issues that the company have faced are more related to practical implementation issues and the attempt to try to deal with the lack of flexibilization, and also deal with, for example, involvement of the labor union where it's required, or even try to mediate the payment of the government aid to the employees. The companies are also concerned with potential disputes ahead. For example, whether or not COVID-19 will be deemed as a work-related disease. This is a very hot topic here in Brazil right now. And in my opinion, such concern is correct, because as depending on the activity performed by the employee, the labor courts tend to find the employer liable for damages and pay and suffering, for example. So in a very brief, these were the main issues that the employers are facing right now in Brazil.
Thank you, Cleber. And before we move to tax, I just wanted to remind participants that you can send questions through the chat box. And also before moving to tax, I had a question for both Guy and Cleber on the cross-border nature of companies' activities, and especially how, if we think about U.S. companies that are doing businesses in other jurisdictions, including in Brazil, every country will have different rules on COVID-19, and I suppose companies would want to have a single policy to address the consequences of the pandemic. So how are you seeing companies dealing with that? Are they able to have a single policy to deal with labor and employment issues specific to the pandemic, or is it sort of country by country? Guy and Cleber, can you talk a little bit about that?
Sure, I can start. Amadeu, what we have been seeing so far is that the companies are trying to decide what measures they will take, on a case-by-case situation. So I haven't seen a client that tried to apply the same policy that they have, for example, in the US here in Brazil. Because we have a very different regulation, and so some circumstance or some policies that works well in the US would not work at the same way here in Brazil. So basically, what we have seen is that they are trying to use the Brazilian regulation to address the policies that they will apply here in Brazil. I don't know if Guy has the same feeling, but that would be my thoughts on that.
Yeah, Cleber, it's a similar situation here. My clients are interested in having uniform approaches, but what they're finding is that each country has a different experience and a different layer of requirements that make it difficult to just create a one-size-fits-all approach to the situation. And frankly, even within the United States, the patchwork of requirements makes it very challenging. The other issue that we have is that we're just starting, sort of this well, in terms of looking ahead and things of that nature. I mean, things are constantly changing, where requirements are changing, rules are changing, guidance is changing. So it's really something that is very difficult to create a uniform standard. And so what I'm finding is that employers are basically trying to create like a core, basic set of requirements, and then building off of that depending on the jurisdiction that they're in.
Amadeu, are you on?
He might have frozen. Well, I think he froze. We can move on. And I guess he was about to change to bring some to bring me the tax discussion on that. And the question that we might have with Amadeu is what Brazil has done so far since the pandemic reached Brazil. So we had all the discussions on the labor. Brazil has been, as every single country, we have been learning how to deal with the situation, considering how impressible this is. So we have been issuing labor rules, and we have been issuing tax rules as the situation evolves. When the pandemic reached Brazil in, let's say, in March, officially reached in Brazil in March, companies, they started their voluntary lockdown. The first issue, the first demand here was to defer payment of taxes. Of course, it's a very natural request, and the government delayed a little bit to allow the deferral of some tax payments. What happens is companies in Brazil, they started filing requests in courts that would allow the deferral payments. The requests, some of them, some judges, they started allowing that deferral, and because there's nothing in the statutes in that respect, they found a term of 3 months or 4 months to defer the taxes. The government, early in April or late in March, it came with a deferral, with a rule with a deferral, but it didn't allow the deferral of all taxes. They allowed a deferral of what we call revenue-based tax, the PIS and COFINS taxes, and all the other taxes, they remained with the same deadlines. Again, taxpayers, they insisted on the discussion of the deferral, but the tax courts, they started rejecting the remaining deferrals by saying that the government itself allowed PIS and COFINS taxes, and this is it. So the deferral was allowed for 3 months for these taxes, and the other deferrals, they never came. So companies, they stopped discussing this. In parallel, the government faced a situation in which it would need cash to provide all the benefits, but on the other hand, it would not be able to collect all this cash because the government understands the companies would request deferrals and would need taxes for keeping the employment and the activities running. So the government extended the exemptions and the deferrals and the benefits. So in many senses, the government reduced to zero some COVID-related import tax rates. It really reduced to zero what we call the IOF rate on loans, which is a financial tax levied on loans here. So the reduction to zero will be to IOF taxes on loans contracted between April and July for 3 months. The government allowed the suspension of some procedural deadlines with the revenue services and some tax courts, which means that some tax inspections, they stopped, they froze. They extended the validity of some clearance certificates. So it was something just to measure the damage in the market. It suspended the collection acts by the Attorney General. It approved new rules to encourage the renegotiation of federal government tax debts. So this is where we are now. We have the government on the one hand providing some benefits and some rates and some extensions, and on the other hand we have the market saying that this is not enough. So we have some the companies trying to reach out to the government to some other exemptions. And what we have at this point, which is very, let's say, trendy in the market, is to have companies filing with requests in courts to change, to trade, let's say, their judicial deposits for some bank insurance, bank guarantees. That means that the companies themselves, they would have some extra cash to pay the payrolls and other obligations. But this is something that, again, the government has never discussed it. And then some courts, they have allowed, and some other courts, they have not allowed. So it's a case-by-case discussion. And again, from the perspective of the companies, it's also a case-by-case discussion, because in some cases, we don't recommend this exchange of escrow deposits. Some other cases, it might be something that we could recommend. Again, this is the talk of the town. This is the discussion at this point, and this is something that the market has been demanding. We don't know what is going on, because we don't know when this quarantine, when this lockdown will cease. We don't know what type of new rules might happen or might be published at this point, and even the government wouldn't know. What we can say is that some rules that were under discussion before the quarantine, and I would say, as an example, we have the tax reform. Some of these rules, they have stopped, or at least they have gone to the background. So the tax reform, for instance, at this point has not been discussed. We know that there is a group in the government working on that, but I don't see the government itself discussing this with the Congress, and that we know that the Congress will need to approve it. The idea will be that the government had this tax reform approved, as they said, it would go up to July, maybe first semester, but nothing has happened so far. So we are by the end of May, we don't have anything, and that we don't have a clear discussion with the Congress. So we don't see that happen in the second semester, because the government, we know that we have elections in the second semester. We have elections for the cities in Brazil. So mayors will be in the streets to discuss the votes in October and November. So that means that it's very hard that the Congress will discuss or will vote a tax reform until the end of this year. So we don't know how these rules that were under discussion before the quarantine will evolve this year. And in my view, we won't have them evolving on a clear way. Again, what we know is that the government is facing problems with the cash. It really needs cash, but companies, they do need cash. So the discussions at this point is whether or not the government will increase tax and whether or not it will, on the other hand, extend benefits for companies not to pay the tax or to extend the payment, the deadlines for payment of the tax. So again, we are in this catch-22, and we only know the news, the tax news, as the weeks or months they evolve. Amadeu, I don't know if you want to join or discuss anything.
Yes, I'm back on. I lost connection. Thank you, Felipe. I wanted to then now move to Marty. And Marty, can you talk about changes in U.S. tax tax law and what you're seeing in your area?
Can you hear me now?
Yes, we can hear you well.
Sorry, my mute light went on. I'm Marty Hamilton. Thank you very much for inviting me to speak today. And like my fellow panelists, the situation in U.S. tax has been heavily informed by the crisis. But unlike the comments of my labor colleagues, the tax situation continues to evolve as the overall economic impact of the crisis continues. Let's start with a little bit of context, because we actually have to look back 2.5 years to the passage of the Tax Cut and Jobs Act at the end of 2017, which was a piece of fundamental tax reform in the US, which had a wide variety of effects, one of which was, of course, to lower the overall corporate tax rate in the US from 35% to 21%. And it did a number of other things to broadly revise both the domestic and international tax base for large businesses. That context is necessary because in the wake of the crisis and in a moment of bipartisanship, the Congress overwhelmingly passed what is called the CARES Act, which is the first stimulus package that involved tax reform in the US. It would be exhausting to go through all of the specific effects on tax that has for domestic US businesses, but suffice to say that there were a wide variety of credits and benefits offered, largely in connection with payroll protection schemes and disaster relief loans from the US government. And the implementation of that in an economy as large as the US has been, I would say, predictably difficult. A new statute passed, drafted very quickly, and with basically large regulatory effect delegated to the government, to the IRS, made that very difficult. But here are the major impacts of this for very large businesses, and in particular for cross-border businesses, are worth noting. The first is that the Tax Cut and Jobs Act in 2017 eliminated the carryback of losses and limited the use of net operating losses to 80% of net income. And the CARES Act, with a stroke, reinstituted carrybacks for 5 years and allowed for full use of NOLs going forward. That freed up a very substantial pool of refunds for very large enterprises, in particular, for prior years, in particular stretching back 5 years, meaning that those carrybacks actually stretch back to 35% tax rate years in the United States. And there are a wide variety of companies that have already begun applying for cash refunds from the government of corporate tax on that basis. Another major change was that our interest stripping rules were revised in 2017 to limit business interest deductibility to 30% on a net basis. That limit has been increased to 50% for the next 2 years under the CARES Act. But then that will revert back to the old existing law, which reduces it back to 30% and did nothing to limit the implication of the even more draconian interest stripping rules that will come into effect in 2025. So the CARES Act made some significant changes that are highly beneficial. Some areas that weren't touched. The corporate tax rate in the US remains 21%. And of increasing importance in the US, the local tax regimes, the state level tax regimes, have largely not yet been impacted. Those legislatures have had their focus on other things, the overall condition of the workforce, the fact that schools are closed, et cetera. But tax reform at the state level in the wake of this crisis is widely anticipated and in fact will likely be necessary. The other piece of the stimulus packages that have occurred, and we've heard this reverberating through all of our discussions, the government has spent unprecedented and astronomical amounts of money to stimulate the economy in the short term in the United States. Everything from writing checks for $1,200 to individual Americans to making literally over $1 trillion of loans to small and medium-sized businesses that may ultimately be forgiven. And eventually the bill for that is going to come due. And so the next phase of this, the forward-looking phase of this that is going to be of particular importance for large businesses, is the overall low corporate tax rate in the US of 21% is viewed by many as unsustainable. State and local governments are going to be extremely strapped for cash. And the reductions in the corporate tax base, from freeing up net operating losses, from increasing interest expense deductions, from suspending the application of certain business loss provisions, is going to further erode revenue at the federal level, and that's going to have to be found somewhere. Which leads us to the current situation, which I think shows the breakdown of the bipartisan consensus on tax at the federal level in the US. Last week, the Democrats in the larger House, the House of Representatives, passed a bill that is a new stimulus passage and contains very substantial tax changes, some of which would actually undo or substantially revise the benefits of those benefits that were just enacted into law, and would also provide some more blue state or democratically leaning state benefits, especially for large metropolitan areas like New York and Los Angeles and San Francisco that have been heavily impacted by the crisis. That bill is viewed as unlikely to move forward in the Senate on a short-term basis, but it is widely agreed that this is the beginning of a negotiation in which there are going to be future changes. For members of this body, the important thing to note is that these changes in US domestic law relating to the stimulus and this crisis are really changes that have been precipitated urgently, but that we're eventually all going to have to be dealt with. It is, I'm sure, well known to the members of this organization that the international tax consensus has begun to break down, that there are new methods of taxing supply chains, that there are new methods of taxing market-based sourcing that are being contemplated by the OECD and are being implemented at other levels. This also has to be added into the fact that many governments have become more inwardly focused, especially with respect to the protectionist benefits of tax laws, and we're beginning to see that in the drafting. This is going to present substantial challenges for cross-border businesses, that for complex international supply chains, in a way that this crisis will only exacerbate. The issues that almost every industry is facing with respect to largely tax-driven or at least tax-informed supply chain planning, corporate structuring, financing structures, are all going to have to be revisited in the light of the changes that are coming into place, certainly in the US, and I believe that Luiz would say in Brazil as well as in all the jurisdictions to which we sell our products or into which we source raw materials. This presentation is necessarily a little bit more high level and a little less detail driven than on the labor side, because this crisis on the tax side is really just beginning. We are beginning to see the filings of very large global bankruptcies. We are beginning to see substantial numbers of lenders that are amending both large and small, large public debt and private financings to try to move the process forward. But how the tax law is going to change and how the wide variety of tax provisions in all jurisdictions are going to affect the future, the future of all businesses is a work in progress.
Thank you, Marty. And as a follow-up question to both you and Luiz Felipe, so I take it that as far as the relationship between Brazil and the US goes, where we've seen for a number of years talks about a bilateral tax treaty and attempts to reach consensus in that area, that under this new phase that you described, and I thought it was a nice description as a more inward-looking phase that we may see countries undergoing, you would consider then the chances of let's say, closer collaboration in the tax area between the two countries even less likely, and leaving politics aside, but just focused on your experience and what you see in terms of recent developments and how they might affect the relationship between the two countries in the tax area.
After you, go ahead.
Sure. So, our view in the U.S. is that the treaty renegotiating process in general has been slowed. The U.S. Senate, which controls the approval of revised treaties, slowed that process to a crawl. There have been some loosenings of that. That said, I think that the likelihood of a short-term treaty being fully baked and an income tax treaty being baked between the United States and Brazil is relatively unlikely. It is in my view, and only my view, a significant weakness in the U.S.'s tax treaty network because of the importance of the relationship between the U.S. and Brazil. But nevertheless, that lack of treaty, is likely to persist. The only thing I would say to that is that, the only politics I will inject into this is that there is a presidential election coming in November in the United States as well. And I note that we're almost an hour into this discussion, and that's been the first mention of the possibility that there's going to be a change in leadership in the U.S. at the end of this year. Right now there is a good relationship between the presidents of our two countries, and that the policy priorities of President Trump are, sometimes unpredictable. And, if he decides to pursue a closer relationship with Brazil, it is always possible with this administration that negotiation of a tax treaty between the U.S. and Brazil could become a priority. That said, I think that we are much more likely to see a continuation of the current situation from the U.S. perspective, in which, in particular, the international portion of our corporate tax system is going to be looked at as a source of revenue. That taxing international operations is going to be seen as a relatively politically desirable area to try to raise revenue, as opposed to trying to raise revenue from domestic operating businesses, especially in sectors that provide large-scale employment. And I think that the work that is going to have to be done by Luiz and me and our colleagues, in the tax community in both the U.S. and Brazil, is going to continue to be substantial. I think this environment is going to continue to be challenging. Luiz, I don't know what your view is.
Yeah, it's the same view. I had the same impression. I don't see a treaty discussion, not even a treaty, the parties signing a treaty, but I don't see a treaty discussion evolving at this point, because we have many other urgencies, and I don't see an environment for that. We know discussion on virus, on COVID. We haven't had an involvement on that, so I can imagine that this is not the right moment for that either. From an internal perspective, for instance, we have seen Brazil signing a treaty with Switzerland. It was in 2018. It hasn't been validated by the Congress itself so far. So I know that in 2018 it was signed. we need a decree in Brazil. We need a decree from the Congress to make it valid in Brazil. It hasn't been validated. So even that discussion, which is even more simple, we just need a decree, the Congress has not reviewed. I can imagine a discussion, a higher and deeper discussion, which is the treaty. So I don't see an environment for that either. It's just like I have the same position.
Okay, thank you. So now I'd like to move back to where we started with Reinaldo, and that was one thing that in particular that he said in this excellent presentation that really resonated with me, because we're seeing that a lot with our clients, which is clients moving to the digital space, and that is a process that we're seeing now for some time, but that has been accelerated by the crisis, not just in retail, but in other businesses as well. So can you tell us a little bit about what you're seeing? You're in a position where you have an excellent grasp of what's happening to the Brazilian economy, and as it moves to the digital space, what do you see the challenges that companies are facing?
Yes, Amadeu, you are spot on the word acceleration, right? I think that companies have been thinking or starting to use to explore digital for some time now. But there was always those, discussions, or can we do this? Is this possible? Let's implement this over time. Now, what happened is what sounded impossible before happened in only a few weeks, right? Many of the beliefs, oh, this cannot be done. We need, I don't know, 1 year of development, or we need to align with this and that. Many of these things, by force of need, ended up happening in a few weeks. And I think that this will not be forgotten. The point that many of the things that were believed to be barriers managed to be taken out, managed to be overcome in a few weeks. So what I'm seeing now much more in the discussions in the C-suites, in the boardrooms, is, okay, how can we make sure that those lessons that we learned during the crisis, we actually also use them after the crisis? And this is decision in speeding decision making. This is employing resources on a task to solve a problem with a minimum viable product, and then after that improve and so on. And in one of these learnings that I think that will not be forgotten is how digital, how advanced analytics can really advance business objectives, right? So. And this is not only interacting with end consumer, with your end client, and this I think that became very, very popular in the delivery. Every shop, even if they didn't have a delivery before, they use different channels, being it the internet, being it phone or whatever, to get. But also on companies in collaborating with other companies. So we saw a marked increase in the way that companies are using digital to collaborate with their suppliers, to collaborate with their customers more actively. So, Amadeu, I think that going forward, this will accelerate more. And I can even see ahead, some companies are starting to discuss and say, what's the next step? Maybe really go the next step into automation. How can we use Internet of Things to automate lots of, field operations so that we can actually take people out of harm's way in a more, with greater magnitude, right? So really something that I think that will shape companies going forward.
Thank you, Reinaldo. So I think each of the topics that we covered today could lend itself to more webinar discussions as we continue to deal with the current situation. And so stay tuned for more programs that the Brazilian American Chamber of Commerce will be offering. And with that, I think I'd like to thank our panelists and for a great panel. And I will pass it on to John for final remarks.
Thank you very much, Amadeu, for a great panel. Thank you all to the members that participated today. Before I close, I wanted to remind attendees that on Thursday, 21 May, we will have the next installment of What Lies Ahead. Industries React at 4 p.m. New York and 5 p.m. Brasilia. The panel will be in Portuguese. If you'll have to learn very quickly if you don't know how to speak Portuguese. But anyway, we hope to see you then. In the meantime, stay healthy and safe. Thank you again.